Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Sorry, I know I took a week off. I was off work, just kind of enjoying life, but I want to jump right back in. So happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. And speaking of subscribers, we're almost up to 510. So if you guys want to go ahead, hit that red subscribe button and get us up to 510 subscribers, that'd be phenomenal. So as you guys can see, we have hit $30,000 in the portfolio, which is crazy. We're going to go through the overall portfolio, the individual holdings. I mean, when I do, there's been at least one dividend increase since the last video. And I did add a stock. I switched one out. So I'll keep you guys all, I'll get you guys all up to date. So as of today, we're up about 230 some dollars, up about 0.8% for the week. We're up $1,300, up 4.5%. For the month, we're up $2,100, up 7.5%. For the 3 month mark, we're up almost $3,000, up 10.6%. For the year, we're up $6,000, up 27.5%. And all time since April 13th of 2018, we're up almost $6,500, up 26.7%. So doing great there. Have buying power of 34.71. That's from transfer purchasing a new stock that I switched out. And then dividends from Aflac. We do have dividends coming in from ExxonMobil, Black Hills, and McDonald's. Black Hills already paid us. So we have four more companies paying us dividends here. And I believe all of them will be paid by the 15th. So here, by the end of next week, we'll have all of our dividends. Once we have those, we can reallocate that capital. And let's jump into the individual holdings. So right now we have Realty Income starting it off with 20 shares, $1,200 of market value. Average cost is a little bit below $49. 4% of the portfolio is in Realty Income. That will be going up. Love Realty Income. They're my favorite real estate stock. $17 up today, up 256 total, and like I said, a dividend on the 15th coming in of about $4.70. Keep in mind that's every single month, so now we have almost enough cash to buy a share of Realty Income every single year. So I need about $6 to buy a share every single year. So I'll get there by the end of the year pretty easily. Then we have Allstate, my insurance company, for the first set of months. We have 6 shares, $674 of market value. Average cost is $105.88. So gone up a bit since then, but I'll still buy it. Love insurance. Excuse me. 2.2% of the portfolio is in Allstate. We have $4.86 down today, up $39 total, up 6.2%. A dividend coming in of $4.86. They did a dividend increase. They did pay 54 cents. Now I believe they pay 80 some cents now. They did a 50% dividend increase. I believe it was like 84 cents, something like that. So, or 82 cents. Either way, it was a great dividend increase, and I wanted to add them for a while. But I bought them just before they announced their dividend increase, and so they have shot up, but I have a feeling that they'll be going down to a regular buying price for me relatively soon. Next, we have WP Carry. So I switched out FRT for WP Carry because FRT was above $100, paid $1.06, and WP Carry's $70 around that range, and they pay $1.04. The downside to WP Carry is they've only become a dividend aristocrat, not a dividend king, unlike FRT. But the reason I switched them out was because WP Carry is industrial and FRT is retail, and since we already have retail exposure with Realty Income, with Walgreens, CVS, they also have the dollar stores. They have great tenants, but I didn't want retail exposure, and I've wanted to switch out WP Carry for a while, and I just liked the prices. I felt that I could make a decent profit on FRT on my shares that I just bought, and switch it out for WP Carry. So honestly, I should have just bought WP Carry instead of buying shares of FRT. You live and you learn. But I do like WP Carry. We have 16 shares, a little more than $1,000 of market value. Average cost is $70.02. 3.5% of the portfolio is in WP Carry. Up $1.44 today, down $30 total. Great. I'm happy to be down already on this position. Gives me a great cost on average opportunity on a quality dividend aristocrat. And then we have Coca-Cola. They actually announced a dividend increase of a penny. So we have 21 shares. So we got an extra 21 cents for doing absolutely nothing. $1,000 of market value. Average cost is $51.39. 3.5% of the portfolios in Coca-Cola. Down $7.88 today. Down $2.56 total. I'll add more of that. But right now, WP Carey and Allstate are my big focuses right now for this set of months. Then we have Altria, of course, the big dividend payer for this set of months. 152 shares, $7,200 of market value. Average cost is $43.59. 23.66% of the portfolio is an MO, up $125 today, up $627 total, up 9.48%. The thing is, guys, I'm not going to be adding to them because they are overvalued in my opinion. So, at least for me, if it goes like $5 above my average cost, I'm not touching it. So, Altria is one of those that I love. I want to add more to it, but I will not as long as the price is inflated. Excuse me. Sorry. But as you guys can tell, it was like a 27% portfolio percentage for them, and now it's down to 23.5%. So that will keep going down. Keep in mind, guys, the big goal for this year is to get more insurance, which would be the Allstate, the MMC that I added to the watch list, and Aflac. And then the second set is going to be the real estate, which will be WP Carey, 3N, and then I have McDonald's as well as PSA on the watch list. So then we have AT&T, $30. Ooh, that went up a little bit. We have 126 shares, $3,700 in market value, almost 38. Average cost is a little below $30. $12 is our percentage for AT&T stock. $13 we're up today. $52 we're up total. Love AT&T. They have the rights to Batman, Iron Giant, just they have the DCEU as well as Looney Tunes and a bunch of other stuff. Friends, Big Bang Theory. Warner Brothers has a lot of content that I love. So, love AT&T, and I will be adding to them in April, so next month. Then we have 3N, 20 shares, $862 in market value. Average cost is $40.12. 2.81% of the portfolios in 3N. Up $3 and change today, up $60 total. So I will buy more 3N. Funny story with them. One of their bigger tenants, so they have 7-Eleven, and then the next biggest tenant, according to the graph I saw online, is actually automotive, which that made me a little uneasy, but it's actually car washes. But the funny thing is, I've actually worked for the car wash that they own property from, or they own land from. They collect rent from them. So technically, this is really cool. So not only do I get a dividend of 52 cents from 3N from their array of tenants, they consistently monthly get rent from a company I worked for already. And it wasn't a bad company. I like them, but I just like the fact that the car wash that I worked for is 10% of their portfolio. So every month, 10% of the dividend that I get from them is technically from the rent of a company I worked for. So it's just cool to get consistent revenue from a company I worked for that I don't have to work for. That's cool. So that was one of the big reasons why I wanted to buy them, because I saw that Mr. Car Wash was actually one of their tenants, and I'm like, I gotta get paid by a company that I worked for because it's just super cool. I think it's awesome. So then we have AbbVie, 60 shares, $6,400 of market value. Average cost is $72.22. 21% of the portfolio is in AbbVie. That's gone down. It was like 24.5 or 25%. 109 we're up today, $2,100, up 50, almost 50% here on AbbVie. It was higher. Yeah, it went down. It was at like 107, so or 108 at one point. So that's crazy that I'm up so high. I bought it like near the bottom. Oh, it wasn't even. Yeah, so I bought it like right. Oh my gosh, like down here, like $2 off the low. Shows, guys, that if you buy and you hold quality, it'll grow for you. Plus, I'm getting that $1.30 dividend, which was a 107 dividend when I got it originally. So that dividend's gone up by like 20 cents. Plus, I get it every 4 quarters. Plus, that stock appreciation's been absolutely phenomenal. So, love AbbVie. Then we have Aflac, my favorite insurance stock, 48 shares, $2,400 of market value. Average cost is 46.28. About 8% of the portfolio is in Aflac. That's gone up a lot. It was like 4%, like the last time I recorded a video, so I've bought more shares. We're down 648, up 209 total, up 9% on Aflac. Black Hills, we have 2 shares, $127 of market value. Average cost is 60.53. 0.42% of the portfolio is in Black Hills, down 114 today, up 610 total. This is one of those that I do need to add more to. I want utilities to be a very big position. It's just the fact that insurance has to come first. But then it will be the insurance is first, then it will be real estate, then it will be Black Hills. And we McDonald's are real estate stock, 2 shares, 418.89 is our market value. Average cost is 214.90. 1.37% of the portfolio is in McDonald's, up 64 or up about 60 cents today, down 10.88 total, down 2.53%, and a dividend of 2.58 coming in on the 15th of this month. Then we have the big payer for this set of months, being ExxonMobil. We have 86 shares, 52.15, so $5,000 of market value. 52.74 is our average cost. 17% of the portfolio is in ExxonMobil, down about $20 today, up 6.78, up 15%, and a dividend coming in on the 10th of almost $75. So, guys, the thing about ExxonMobil, I got so much flack for holding them. Like, let's take a look at how low it got. So, oil went negative last year, and the price got ridiculous low, down to like $31 a share, and I just held on. I bought some shares when it was really low, but it didn't really affect my average cost. My average cost used to be like 65. So I bought a few shares here and there at that depreciated price, but I got so much flack for holding them in this area of like the $30 to $45 range. I had a bunch of people on Instagram telling me to sell. Guys, if you are confident within a company, with a company holding it, you should hold it for the long term. I mean, look, guys, it's had ups and downs, but none of them have been as bad as that. Oil went negative. Everybody was saying that Exxon and Chevron were going to be going out of business. But if you looked at the actual balance sheet, and the company had alternative energy, they weren't 100% dependent on fossil fuels. Sorry, people are texting me, but they weren't 100. They're not 100% dependent on oil. That is their biggest moneymaker, of course, but they're into green energy and they're doing a lot of research when it comes to that. So I'm not worried about Exxon. I never was worried about Exxon. And this chart shows that, you have to do your own research and you have to be confident in your own investments. I wonder the percentage of people that sold, when it was at 34, when it was at 33, and now it's at 60. It's gone up 45% in the past year. And all you would have had to do to get that is hold the stock. I mean, I bought this last year when I thought it was at a fair value of like 40 something, or what was it? It was like 50. Yeah, the 52 week high is 61. So 30 to 61. So I'm like right in the middle of it at 52, closer to the high than the low. So, but that's the thing. When I bought it, that was closer to the low than it was the high. So fluctuation. But if you hold quality, it'll be okay. Like, this is a big blue chip stock. They make millions and millions of dollars a year. So, when the crowd is telling you to sell it, don't listen. If you're confident in your own abilities, if you're confident in your analyzation of the company, don't sell it. I was laughing at people when they were telling me to sell this, because I'm like, I love ExxonMobil. It pays me the biggest dividend for this set of months. Maybe eventually, if EV is as dominant as they say it will be, maybe like 5 to 10 years down the line, I might sell it. But I'm holding Exxon for the long term. It's going to be one of those big pillars for this set of months. Now, of course, I'm going to be buying other things because Exxon's such a big position. So, of course, I'll be buying more McDonald's and specifically more Aflac, because I've done a lot of research into insurance, and I want that to be a really big position. but it's not because I don't like Exxon. Right now, for me, Exxon is overvalued. So if Exxon goes back down to where it was, sure, I will buy more. But keep in mind, guys, the big goal for this year is to get those stocks, the Altria, the AbbVie, and the Exxon Mobil's, down to a more healthy level. Not because I don't like the companies. Obviously, I do. I held through, the biggest market crash we've seen in years, but it's because I don't want to have over allocation to the companies that are more shaky. The reason I bought ExxonMobil is because it's more volatile. I wanted a volatile stock for this set of months, so I knew I had something to buy every time that month came around. It was more likely, in my opinion, that Exxon's going to be down more than McDonald's or more than the utility I have. So hold quality and it will pay you. Next, we're going to take a look at the watch list. So I've switched out Pepsi for KMB. I might switch it back. I like both companies. I wanted to have 5 companies instead of 4 because it seems more comfortable for me. Kimberly Clark at 133, definitely buying it there. Almost $30 of upside. Then we have MMC. This is the insurance company Buffett bought, and I'm not buying it because Buffett bought it. I am buying it because the balance sheet's phenomenal, and it's insurance, and I like it more than Lincoln, which is the other insurance company that I found for this set of months. They are way better. So at 117, I think it is not a buy. I want to wait. That's why it's still on the watch list, because 120 is the high. I want to be buying it at like 109 to 1. Well, the lowest I want to, of course, I want to buy it as low as possible, but I want to buy it about 25% below the 52-week high, which it's not even close. Then we have Procter and Gamble. I've wanted them for a while at 127, definitely a buy. And then I added Public Storage. So I know I've had them in the past, but this is way before I started recording. But I like the business model. It's simple. People have extra stuff that they don't have room for in their house. They buy a storage unit and then they just pay the company every single month. It's just like rent. So it's the same thought process behind WP Carey by 3N, and by McDonald's. So franchisees have to pay McDonald's to own the copyrights and whatnot for in the system and whatnot for McDonald's. Public storage gets paid because people have stuff that they can't obviously hold in their houses and or in their homes, and they pay public storage every month. They're the biggest storage facility in the U.S. They have stuff in Britain and Canada too, I believe, Puerto Rico as well, from what I read. But I want them. I do want McDonald's to be the main company for real estate, but I do want Public Storage. I love the business model. It's a sleep easy company, and I will be adding them. The only issue with them is the dividend growth is not there. They pay $2 a quarter, and they've done that for a while, so they don't have dividend growth. But it's a sleep easy company, and I do want to add it. So that rounds out the watch list, with Berkshire Hathaway being the Christmas stock. So I do want to add this, but only when it's Christmas time. This will be my celebratory stock for each year that I'm in the market. So right now I should have, this will be 3 shares. So when Christmas comes, I'll add more. I'll probably buy 3 shares of this just so I have it for every single year I've been in the market. So this will be our annual buy, being Berkshire Hathaway. But I love Berkshire. They have multiple companies I want. And at 260, they're only $2 off their high. So I definitely will not be buying them right now. But love Berkshire Hathaway. So, guys, with all that being said, we're doing great. We have dividends coming in. I switched out. I added a new insurance company with Allstate. They did a great dividend increase. WP Carey. I switched out because the price was better. I get paid more per month than I would with FRT. Coca-Cola had a dividend increase. I bought more shares of Aflac. And then I added a few stocks to the watch list, and super excited about it. Dividend wise, we keep growing. I'm gonna allocate that capital. The reason that I was actually off work for the past week, my job flexed us off because we didn't have parts. So now today's the first day back. So I will. I'll probably not. Excuse me. I probably won't be adding capital to the portfolio currently just because I got flexed off for a week. So this check is going to be really small. Not this one, but the next one. So I'm going to have to live off this check and depend less on the next one. So, as for March, I've already bought shares of Aflac for February, and then March I bought WP Carry. So I've already purchased stocks that will add to my income for April, and then with the first check of April, I will be allocating it towards the market. So I will be able to buy stocks that will pay me for the next set of months. So AT&T will be purchased in April, but for right now, I'm gonna have to hold off on allocating new capital because I got flexed off. So I just want to let you guys know. But I will have the dividend videos rolling out every single day again. I needed a little bit of a break. I was burned out, which happens from time to time. So thank you guys so much for watching. Remember to hit the subscribe button. We're close to 510 subscribers, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.